The Treasury Bills market witnessed a spike in liquidity due to the disbursement of 656 billion naira on Tuesday this week by the Federal Accounts Allocation Committee. Ifeoma Onyejekwe, fixed income trader at UBA, joins me now to discuss what to expect in the market for the next coming week. Thank you so much, Ifeoma, for taking the time out to join us today. Bring us up to speed on how trading has panned out so far today across the different segments.
Good afternoon, Esther. Thank you for having me. Like you said, this week on Tuesday, this week started end of May and it flowed into a new week, which was June. And the FAAC committee had their meeting last week, so FAAC payments was made on Tuesday, which was the end of the month. And this spike in liquidity, we saw bullish sentiments in the Treasury Bills market, as well as in the short end of the bond curve. We also saw a drop in money market rates. It was first trading at the ceiling of 14% because last week was very illiquid. But as soon as liquidity came in, we saw a drop to the 4 rates of 6%. But as of today, we've seen that the central bank has carried out its regular industry debits. So we expect next week to open very illiquid and money market rate to spike back to the ceiling rates of 14%.
All right. Are you able to talk to us about how the naira is performing against the dollar at the INE window in NAFEX?
It's been pretty stable. We've seen consistent CBN interventions in that market. So it's been really stable at 415.
Well, what about the corporate bond market? What are things looking like at the market there? Talk to us about the rates that we're seeing.
Well, we've seen a lot of issuance. As to the rates, it really depends on the type of bond, whether secured or unsecured, and also the credit ratings of the company. But we've been seeing a lot of issuance in that space.
Talk to us about your forecast for the coming week, and of course for the new month. Also, it's a new trading month. We've seen rates. Talking to a trader earlier about the 1-year T-bill, and he said it's trading somewhere around 6% right now. We know that for a very long time it was somewhere at 4%, and I'm just wondering, at 6%, is that a comfortable level for investors, or could we see a push for something higher going forward?
We would likely definitely see a push. So next week, Wednesday, we have an NCB auction where 167 billion is expected to be rolled over. And taking a cue from last auction where the 1-year rate increased from 4.7 to 6.49, we also expect a 10 to 30 basis points increase at the next auction. So yes, we'll most likely see a definite spike in rates. Right. And then the month of June is less liquid than the month of May. Total maturities for this month is 336 billion compared with 450 billion last month. So it's less liquid than this month, and we'll likely see a push in rates.